You're watching Masters in Trading Live with Jonathan Rose.
Hey guys, it's Jonathan Rose, and for 30 years I've been a trader at some of the world's biggest exchanges, and now I get on live each day the market's open, 11 a.m. Eastern Time. I need a drink. 1 second. And I gotta center myself too. As I was saying, I get on here each day the market's open, go over the market, share some thoughts. Once in a while, we'll share our trade of the day. I got the chat open. Chuck, Janet, Rick, Greg, Navi, thank you guys for joining. How's everybody doing? Market is moving again, but today is a little bit different. The market's been getting its butt whipped for the last 30 days or so. Today we're strong. Not only strong, seems like everything is turning. Today feels a little bit different than our other up days, and I'm going to show you exactly why. Let's go over to the chat. We're going to have some fun today. We're going to talk about the rally. We got a trade in Senx. You guys in the chat, let me get a show of hands. Who was involved in Senx? CENX. This was a divergence trade. I'm going to get into this right now. We're going to go to the screen. Senx, guys. Senx. There we go. Yes, I was in. Yes. Yup. Yes. Sold this AM. This is a good example of common sense trading. Whoa, where did everything go? 1 sec, guys. One sec. So this is a great example of just common sense trading. And here's what I mean. Let me pull up my pen for this because this is going to be fun. What's up, George? James? Okay, when I say common sense trading, let me show you what I mean. So this is US Steel. And this is Senx. Thanks you very much. These two are extremely, extremely correlated. When one goes higher and the other one goes lower, that presents a trade. And on this chart, that presents a trade every single time they break apart. Every single time they break apart, they manage to come back together. So when X, US Steel, got a bid and went higher, April 8th, which was just 2 weeks ago, I said, guys, let's jump in and buy the May 15 calls in Senx. Yes, Senx, Roger, Senx. So what did we do? We entered this trade for $1.50. That's $150 per one lot. That's $1,050 or $1,500 if you do a 10 lot. The cool thing is you can never lose more. Well, today, we're taking off that trade in Senx just 2 weeks later, getting in for $1,500. And right now, you can get out for $330, $3,300 in about 20 days. So great job to all of you guys getting in the Senx trade. We like to say thanks you very much when that Senx trade works out. And if I can find my glockenspiel, we will celebrate with a glockenspiel. Excellent trade, guys. Let's press on. Jerry taking advantage of the vol, 250% gain in his QQQs. Wade's in long QQQs as well. How did they know, though, that the QQQ was going to rally? What are we watching? Well, how about this? Move the chat to a different screen because I'm going to get excited with this one, guys. Okay. Have you guys been watching Masters in Trading Live? Because Masters in Trading Live, 421, we talked about the yield curve. The yield curve between the 2-year and the 30-year since Liberation Day, April 2nd, this sucker has gone somewhat parabolic. As the yield curve continues to spike, QQQs were getting their butt whooped. Well, looky here. A little pause. When that paused, the QQQ started to rally. Was it going to follow through? Well, today we wake up and that yield curve gets absolutely shellacked. QQQs get that nice bid, go from 430 to 450 to 460 because that yield curve went from being very steep back to being very flat. Again, we've been talking about this in Monday's live, in Tuesday's live, and now in Wednesday's live. Watch fixed income. Learn how to watch the yield curve. Also, in our subscriber-only chat community, we're in there talking about this throughout the day. You need to work with a group, guys. Trading by yourself is freaking dangerous. So the yield curve explained or told us that risk was coming out of the market, which I showed you on this third chart here. Well, what else are we looking at? Yesterday, I introduced you guys to the MUB, the Municipal Bonds ETF, a very, very liquid ETF. And we got to the point that we were concerned about credit risk. Right now, one sec. Computer's being a little funky. So right now, market's been getting killed, right? Until today. But it was really a tariff-based move, a news-based move yesterday. We talked about a concern that the MUB, if the MUB takes out this 102, 103, we're going to start to have a credit risk issue. A credit risk issue is very similar that we had in 08, 09. But guys, look at the MUB now. Once I show it to you. When the markets start moving, you got to figure out what's the cause. What is going on? What's really the problem? Rick, that's right. Let's look at this MUB, guys. And this was so unbelievably helpful. It's going to go to a stock chart here. MUB, you guys could all look at it. It got down to very, very concerning levels where institutions were either going to jump in or we were going to face credit risk. Well, we talked about 102 half down here. Last trade in the MUB is 104. We are not out of the woods yet, but for a little bit of time, the MUB is giving us some relief. Look at this next chart, and this blows me away, guys. Look at this. Ready? What do we have? I'm taking you back to the beginning of the year, okay? Look at the NASDAQ. Look at the MUB. By the way, I follow the yield curve very closely. You want to hear it? Want to know something? I follow municipal bonds and junk bonds, but I wasn't aware of the MUB ETF. I just started following the MUB as well. I've always followed the steepness and the flatness of the curve, but this is what we talk about where the creative trader wins. The creative trader is looking what is really causing this move. When the MUB chilled out, when the MUB rallied, that gave permission for the QQQs to rally as well. Anybody have any questions about that before I move on? I want to show you one more thing before I press on and move on to our all access group. All the trades. Look at what trades, guys, have been working in this last month and a half. 2 months. Long gold, right? Long gold. Gold has been very strong. Well, what you're going to find, guys, is everything that moved when the market, when the Qs and the SPYs traded lower and the VIX traded higher. Everything that moved, everything's going to reverse here. So I'm trying to show you the gold-silver ratio that we talk about. That's going to reverse as well. Everything is connected. So look, everything is connected. Gold-silver ratio going parabolic since April 2nd as well. Look, it's turning. When one thing turns, the MUB is turning. The yield curve is turning. Let me show you some more things that are turning. VIX. VIX is turning. What about the VVIX, the VIX of the VIX? Right back down to its historical range. Guys, I almost think that we're out of the woods. But the number one thing to watch, I want you to watch that MUB. The MUB needs to stay bid, needs to stay above that 102.50 for the market to fully recover. Okay? This is my kind of market. This is where I get the most confident, and follow that MUB. I got to reboot my computer or put in some security alert. That's why I'm having issues. But that's what I got, guys. Let me hop back on. What I'm going to do now, guys, is we have our member-only Discord where we have our all-access community. I'm going to talk to those guys right now, and we're going to talk about some of our trade management in our open positions. We'll be on here live tomorrow, 11 a.m. Eastern Time. We're going to continue talking about the MUB because that is the key indicator that I want you to follow right now. Awesome. Thanks so much for watching, guys. Make sure to give a thumbs up, subscribe, and hey, share this video with your friends. It all helps. Thanks for watching All Access. We'll be right back.